And then lastly, I'm going to briefly touch on this because I will admit the nickel market is still relatively broken. Ever since the short squeeze, which caused markets to shut down for a couple weeks, liquidity and volumes being traded in the market has really thinned out. There's not a whole lot of price discovery. You know, as we look at the chart, there isn't a whole lot of rhyme or reason to it, but I will say maybe this is a little encouraging for some of our customers. It does look like ever so slightly the price of nickel is beginning to drift back lower. And obviously part of that's going to be feeding from China being locked down, higher interest rates, all those things. But I think also just the natural unwind of this fear situation that we've been in for the last 2 months, ever since the short squeeze, it's beginning to unwind a little bit. So I think we're beginning to see some more normalized prices. You know, obviously I drew in the moving average lines, so we're now below the 50-day moving average, which is just a signal that momentum is beginning to wane a little bit. So it looks like we're coming back down to earth as I look at this chart here. And as I mentioned, the volume traded, so this is a chart of the open interest on the London Metal Exchange, which open interest is just a fancy way of saying how many people are trading LME nickel right now. And you can see that ever since that short squeeze, a lot of traders, a lot of hedgers have just gone and left the market. They've closed up their positions. Some hedge funds are even suing the London Metal Exchange as we sit here today. So the LME's got a little bit of a credibility issue, if I didn't mention that in prior calls. And I think that's also contributing to kind of a wonky price action within the market itself. Now, unfortunately, offsetting a little bit of the price declines we're seeing on nickel as it relates to surcharges, I would expect that in the coming month, maybe coming couple months, natural gas is likely going to begin getting implemented into the surcharges. I believe the threshold for most of the domestic stainless steel mills is $7 an MMBTU. We're currently, as of today, sitting right up around $8.50 an MMBTU. So the price of heating your facilities, the price of generating electricity is quickly getting more expensive again. And unfortunately, that is likely going to feed through with a surcharge going into stainless steel. It's not going to be massive. I don't expect it to be massive at this stage, but it is going to be an incremental adder on top of the traditional surcharge mechanism. So I know we had a little bit of doom and gloom in here. So there's certainly a lot to digest, and there are some real headwinds out there. I don't want to mince my words and say that everything is perfect, because we're certainly getting into a situation where the environment is a little less accommodative. And what I mean by that is we're beginning to hike rates. We're beginning to taper off the balance sheet at the Federal Reserve. So it is purposeful. We are when I say we, the administration, you know, the central banks, they are attempting to cool some of these markets a little bit. So this is a concerted effort. But again, I think the real resounding theme of this call should still be, as we look at the manufacturing economy, I think on a relative basis, the manufacturing world is going to be just fine. And if anything, if we take some of Brent's comments to heart, looks like it could be pretty decent for a long time coming, assuming these lead times and these business activities maintain and customers don't walk from the business.
Nick, what I find interesting is I unpacked those last few slides you went over. If anybody missed last month's when you dove into the nickel situation, you brought up some points about, you know, nickel being factored into the surcharge. You know, could it be, was it scrap was the other that maybe start accounting for that rather than nickel? Some could be, you know, abandoning, not abandoning, but like moving off the LME, or like you said, have a trust. And some of these things are kind of coming to fruition a little bit, or you're seeing some of that trickle in. And there was a kind of a phenomenon last month, right, where normally the stainless mills and their surcharges would be similar, where we saw Outokumpu and NAS have different, one taking it into account and one another. That was just kind of a one-time phenomenon, right?
For now, it was a one-time phenomenon. And the situation was basically that North American Stainless artificially picked a number, and I believe it was $12.60 a pound. And they just said, that's what we're going to plug into our surcharge mechanism. Whereas Outokumpu said, we're going to adhere to our LME pricing mechanism. That's not to say that this issue can't still come up again. If we see another short squeeze, or if customers just get fed up with pricing for whatever reason, you could see the mills revisit this discussion and say, we need to figure out a way to get off of the LME. And maybe, like you said, move to more of a scrap type of mechanism or something like that. I think that discussion is still on the table, and I very much so think the LME still has some very big credibility issues that it's going to have to deal with. But for now, with the LME nickel price drifting back lower, drifting back a little bit more into what I'll call a more normalized range, I would say that conversation is probably tabled temporarily.
Got it. Yeah, and you always bring in some interesting perspectives here. I mean, the latest one being about maybe natural gas being factored into that surcharge. Question from the audience: Do you see that possibly spilling over into things like carbon as well?
Yeah, I mean, I know I spend a lot of time talking energy, and I apologize for that. I have been, for personal reasons and for work reasons, been focusing a lot on the energy space, and I the main reason why I bring it up all the time is because I mentioned the phrase. It is really the workhorse of the manufacturing economy. You can't make anything. You can't melt metal. You can't move things around. You can't do technological innovation without energy. I mean, it is the lifeblood of all economies. And unfortunately, right now, we are seeing a very strong correlation between really all of these sources of energy, whether it's coal, whether it's natural gas, diesel fuel, crude oil. They're all very strong right now. And that's making it more difficult and more expensive to make all things. And for right now, that's creating inflation in the production of all finished goods. That can break at some point, but for now, that's the situation we're in. So I don't know if that answers your question, but yes, I mean, without a doubt, these energy markets are spilling into all things. I mean, I brought up the point with Brent, where the U.S. administration wants more energy, but in order to make more energy, we need energy going into the production of steel. So you do truly get this feedback loop where inflation begets inflation. People who want to get employed are requesting more money. All of these things are cycling into kind of a wage price spiral, if you will. And I don't mean to sound too doomsday. It's just that's sort of how these things happen. And we just haven't been in this inflationary environment since before I was born. So it's
we have seen some domestic mills start tacking on an energy surcharge. When you look at Europe, though, the energy surcharge is prevalent.
Yeah, and Mike, you didn't ask this question, but I mean, there is a real issue or risk rather of if natural gas prices go too high, things like, I think we've discussed this in prior calls, things like aluminum are very energy intensive. And there are risks that if natural gas prices keep going the way they are, one of two things either has to happen. Either aluminum producers need to pass through a much higher finished product price, or they shut down production. And we have seen a little bit of that within Europe where they've curtailed some production. I believe that happened both on aluminum and stainless steel. So yeah, it's certainly something we want to keep an eye on.
Brent, when you mentioned you've seen some domestic factor in an energy charge, do you think that sticks for a long term, or you think that's kind of a temporary as things are going on right now?
They're just, right now, some of them are just dipping their toe in the water. So it's something that's pretty fresh. But again, the mills are struggling with these energy increases, like we're seeing across the country. But again, it is 10 times worse in Europe.
Guys, you've jam-packed the information here that we're right up against the hour. I have one question. Someone's been waiting patiently for Brent, so if you don't mind waiting over a minute or two. Brent, to your conversation regarding supply, what do the apparent demand versus supply numbers look like in the U.S.? Is there a gap? If so, why?
Well, I mean, that varies all over the map. I mean, the thing that I continue to hear from our sales forces are that customers have backlogs, but then when I ask them, do the customers have backlogs because their people short, their supply chain short, or because their business is up 20% over last year? So I don't think there's really a good way to measure what demand is versus supply, because there's so many mills in the bar and tubing industry, and trying to pull that data together, even if you can pull it out of some of these privately held companies, would probably be difficult.